Well, Sean Malone with Digital Business Masters. Welcome to another overview. Week commencing the, where are we today? 14th of April already. Okay, things are moving very quickly now. So we come together every week. You can be here live, welcome live. If you're here live, we appreciate that. If you're listening to us on YouTube, hit the bell, hit the like and share. Okay, help us build up that algorithm over at YouTube. Again, we're building back up our YouTube following base. So huge amounts going on. So we come together to try and make sure we're covering the two main churches. One, what's going on globally, whether you like it or not, you're involved with globally interconnected business when you're working with digital business. So that brings with it all sorts of different things compared to running a local business, certainly a bricks and mortar local business. If you've come from that world or you've come from an employed world, then moving into this space may feel very daunting. There's no question about that because you're taking into account so many more factors. But at the same breath, it's those factors that give you the impetus and the energy to go forward and create much, much bigger results much more quickly. That's certainly been my experience. And it's why we got involved with this industry back after 2008-9, that crisis, as they call it. We looked at the business structures hard and we determined that we needed to be globally connected on a consumer level and on a B2B level. So we look at the big picture, and also the second part, which you won't find on YouTube, you'll find it over in our mothership over at DBM Academy. You'll see the link below where you can go and register into the DBM Academy, become a system subscriber, and we'll show you how we apply the practical side of what I'm going to talk about today to create the digital business momentum you need to take advantage of what's happening on the macro big picture level. So we've always connected those two things together. And we just push through it, come hell or high water, it doesn't matter. You'll see that it's structured in a way that means we drive equity and yield. And yield. We just don't wait around for equity like you hear a lot of people online talk about, wait for this, wait for price, wait for that, do that, trade your way to success. No, you're never going to do that. You can't run a business off a balance sheet alone. You have to drive yield. So we talk about that a lot in part 2. Not here to give any advice at all, because we are simply an entity mainly leveraged on education, okay, where we're simply showing people how to understand the two memes in the left-hand side. Yeah, we figured it out many, many, many years ago that you need to make sure that you're owning the technology, not just using the technology. And that's becoming even more profound as we move into this next decade with AI, robotics, and blockchain. Yeah. So it's very obvious, it has been for years, that you need to, not a normal person I'm talking about, a normal individual, you need to own what you use. You need to own what you consume. And as you consume it, you create revenue. That revenue, if it's managed properly as an individual and as a business, goes back to benefiting the asset that you own. You're then able to use the equity from that asset to go and drive more yield, and more yield means you can go and spend more in the entity that you own. Repeat. So it's all about running a digital business, if not a digital lifestyle, actually. And just a little meme I picked up just this week. Owning one Bitcoin today, which many of the people in DBM do, is more rare than being a millionaire. Think about that. Yeah, in other words, there's fewer people who own one Bitcoin in the world than there are millionaires right now. That'll change pretty quickly, but right now, interesting thing to understand. So we've been around for many, many years. We've spread across a whole range of sectors. We understand how to continually use our digital-based balance sheet to continually divest and invest in all sorts of different ongoing concerns. And from that, we create a yield. And with that yield, we build up a balance sheet to become stronger and stronger. All the while, assets such as Bitcoin are growing in price, which gives us an ability to accelerate and get to our end goal and results more quickly. Yeah. So like I said, we're not advising anybody on that. What we're saying is that it's possibly a good idea to always seek financial education as soon as you possibly can in life. So I know a lot of people in the DBM community are over a certain age, and we spend a lot of time now focusing on what we can do to push this information and knowledge and insight back towards our kids and grandkids. Yeah, that's quite a pleasurable thing to watch happening as the pioneer, the grandparent or the parent who has worked this last few years to create a difference in their lives on the basis of what I've just been describing, then taking some of that and almost gifting it backwards, but not doing it in a way that you're giving your kids or your grandkids the finances. What you're doing is you're giving them financial education. It's all about mindset, skill, systems, income, wealth, repeat. Because once you've got wealth, you'll find yourself needing a whole different mindset again and a whole new set of skills. Yeah, building income is not that difficult. Maintaining income is the real challenge. So we help people on that process. We're not here to tell you what to do. We're here to guide and support. But that's one thing, okay? Guidance and education is all well and good, but it has to be applied. Applied knowledge is what it's really all about. Anybody can get knowledge. Yeah. Another funny thing that struck me this week was people like Robert Kiyosaki or Lynette Zhang, Mark Moss, all these big YouTubers who basically make a living out of frightening people to death. Somebody said they predicted the last 20 recessions of 3. So in other words, their stock clock is right twice a day. They're continually feeding people with fear that makes them react and buy books and watch videos, and it creates income for them, but it doesn't give them a footing on which to create a difference in real time. So we've possibly pushed against that somewhat, and we certainly swim against the tide because we take some big risks. But we do that because we know that there's no point. You can't make a living just off watching YouTube, reading books, and moaning your way, yellow vesting your way into a change. At some point, you're going to have to put the rubber on the road, right? And that isn't easy. That isn't easy. That's why it's about mindset and skills first before you get into systems, which is what this page represents. All behind each of these sectors sit multiple systems, multiple businesses, multiple coins that allow us to explore, let's say, and test and put our fingers into things that we know are the right direction in terms of what we need to do to own technology, leverage equity, and drive yield. We know that, but finding them and finding ones that are worthy of your time, that will give you back what you need, which is your seed money in the first step, and then build from there. That is really difficult. And it's even harder when these projects move around and to stay the course. And that's the biggest problem we've found, not just for ourselves, but for guiding a global community, is people who've got the resilience and the fortitude and the mindset to be able to withstand what it takes. Once you've found a reputable supplier, a reputable group of individuals that are running that supply business, and a proper business case, a real business plan, once you've found that, then it's often a case of not just throwing money at it, thinking that'll be a done deal and I can go and live off touching my, a keypad every day, just claiming. You've got to build through it. You've got to manage your supply base just as keenly and carefully as you manage your customer base. That's business 101. So keeping that up isn't what a lot of people sign up for, right? Especially in these early days where there's a lot of marketers involved, a lot of excitement, a lot of people who'll just sell you stuff thinking that it's easy. It isn't easy. So DBM's taking a slightly different angle on that. And either way, it doesn't really matter because each of the industries we operate with in these 14 different niche sectors are still around and have been here for as long as you can see in those yellow bubbles. Now, does it make it wrong, right, indifferent? Doesn't matter. Is there better things out there? Of course there are. Is there worse things out there? Of course there are. So we just continually move and work with what we've got, and we work together as a community to find better things all the time and help each other through what it takes. That's really what it boils down to. Because at the end of the day, if you are going to get to this place whereby you're taking advantage of globally interconnected value on the blockchain, driven through the internet, and you're able to take independent decisions as a grown adult as to what you decide to do when, if, whenever, then the least you can do when you've taken those decisions is to carry on. So we find ourselves in that place in 2025 at DBM, and which is quite interesting and exciting, as you'll find out in a minute, because now we're starting to see the world understand this on a much, much bigger scale, which is giving us the tailwinds. So in order for us to structure that, so for years and years, it was, us helping people individually. We went through all the MLM stuff and all that stuff. You soon find out how fickle that world is. And then we thought, well, no, we can't just keep throwing people at things and hoping it's going to work out. Let's put some structure down. Let's try and organize ourselves, especially now we're so mature that we're managing upwards of 14 different industry sectors and managing people through umpteen projects and companies and coins inside those sectors. How do we organize ourselves? So we came up with this about 5 years ago that enabled us to put the backbone into the academy. And in other words, it's a way for you to start to invest in yourself at varying levels because we understand that people have different levels of affordability. And some people want to test things out and some people want to, back out or carry on. And some people want to say, Ron, this is for me. I'm going to do this. That's where your income people are. And some people get up to say, yeah, I've cracked this now. I really need help with how I protect my income. How do I look after my security? How do I make myself safest as possible, seeing as I've worked so hard as I've gone up these steps from skills to wealth? So where you're at is entirely up to you. All I would say is that it's a good idea, and I wish I'd have had this a decade ago, to say, look, it's for you to choose where you're at, but always remember to invest in yourself first. Traditionally, you can do that through books and videos and all sorts of stuff, right? And we've all done that. We spent, they say, spend at least 10,000 hours at something to become an expert, right? So you're on that journey, but you can accelerate that journey because you can work with people who've got what you want to improve it. But even those of us who are in the middle of the shifts that are going on, and there's some major shifts happening as we speak, I'll talk about in a minute, we're going through that as well, don't forget. So what we try and do is put the community together and help you guys to interface with the fact that we do this full time. So we're going to look at things all the time, whereas you might have a job to do and a family and everything else. So, you want to buy into the acceleration. Let's put it that way. So you're buying acceleration. You're not buying success. You can't do that. You're buying acceleration. So that's what we're trying to do here with this type of subscription model. Now, why we're so passionate about it? Well, for the longest time, in my own personal experience, you can go through the decades of life and you watch your parents, you watch your teachers, you watch the bosses, you watch the banks, and you assume that everybody does the same thing, right? So everybody learns, everybody gets a certificate at the end of a learning process. You use that certificate to get the best job you can. You bolster that job as quick as you can to put it on your CV, and you work up the ranks. And in all those years, you're being rewarded in something called currency. And then you think, well, if I get enough currency, then surely, because I watched my parents do it and I watched my grandparents do it, then surely if I do that, then it'll be the same for me. Well, it's not quite as simple as that for one major reason. That since 1971, there's been no way that the average person earning, let's say, less than $100,000 a year, has been able to keep up with the deflationary nature of purchasing power that currency is built on. 7 to 10% per year. So you go back and just trajectory back your life over the past 25 years and just have a cursory look at what the average purchase of an average product and service was 25 years ago, and then have a look at what you were earning then, and then have a look at what you're earning today and what the price is today. And I think you'll find you're in exactly the same place. Now, that's the fundamental problem. And unless you understand that, then you're going to be a victim to it. Once you start to understand it, then you start to think, well, that makes sense because I'm living it. So what do I do about it? Well, that's the whole point of just understanding the fundamental skill of, yes, earning income. Of course, we all have to get out there and create value for the people, whether you work in a job or whether you work in a business. That's how you create income. Obviously, that's what I'm doing right now. But it's what you do with that income that's the real the gear shift. Yeah, what you don't do is just take that income directly and try and keep up with the buying, the ongoing purchasing of liabilities that you feel you need to have a life, live a life, or pretend a life. What you need to do is have the fortitude and calmness to say no. And this, we speak to a lot of people in their 40s, 50s, and 60s still about this, which is just hang on a minute. Your lifestyle has been built on this array, which is fine. But maybe if you're feeling like you're walking into an unknown place because of the nature of just realizing that your purchasing power is not going to be enough, God willing, you're going to live 20, 30 years after a certain age of not working anymore, which people call retirement, which is a fallacy of an age. You can retire anytime you want, right? If you're going to think right now that you're going to quickly switch into that on the path you're on today, it's not going to happen. What you need to do is shift so that you're putting proportions of your income into assets that cash flow. At least assets that drive equity. But as you'll find from DBM, we don't rest on waiting for prices of markets because we understand that the main reason that prices of assets go up is because of the devaluing nature of currency, not because the value of the asset's gone up in itself. So your house is a good example, right? You'll probably sell your own home that you've spent all the years paying off, and you'll get to a point where it looks like a lot of cash, but you're going to spend most of that cash by looking after yourself into your old age. So what's the benefit? It's a case of taking a judgment as early as you can to reassign any levels of income, startup capital, if you're going to start a digital business, and putting that into a means that allows you not just to own the asset, which is appreciating by definition if you do it properly, but also apply into assets that cash flow, which isn't easy. We're not saying it is easy. We're just saying it's something you want to be looking at if you're determined to fund liabilities for the rest of your life, as opposed to buying them, and certainly teaching your kids and grandkids to do that. So what are the three main pillars that we stand on for that premise? You keep drilling down until you see the wood for the trees. Well, the obvious one is Bitcoin. Yeah, with an appreciation, a vol, a movement in its overall value in dollar terms, there's no other asset class in the world that touches it since it was created back in 2009. No other asset class. Now, there's a big proportion of that because of the devaluing nature of fiat currency, absolutely. But is a bigger proportion of it because of the nature of which it exists, called proof of work? Yes. What is proof of work? Go into the academy and learn. Why is there an acceleration to this asset class that isn't seen on any other commodity or asset class? Why? Well, make it your business to find out. And once you've been orange pilled, that's what they call it, then you'll never look back. You just won't. You'll just become more frustrated that you don't own more. But that's when the real skill comes in terms of converting equity over time into yield. And you're using your balance sheet, we call it critical mass, which is big enough to be able to perpetually fund your decisions you're making about applying that working capital through equity into yield. And this has been a complete revelation for us at DBM over the past 5 years. It's not easy, and it's still not easy to this day because you'll find things moving around. It's just the nature of it. You've got to go and find the best relationships you can, because what's happening is, and it's only going to get quicker now, is companies are finding themselves in a position through the internet, on the blockchain, through smart contracts, where they can source growth capital, crowdfunding 2.0, they call it, crowdfund 2.0, from individuals. They don't need to go to VC. They don't need to go to institutions. They don't need to go to the big money men. They can go to the likes of you and me. And this has been a phenomenon that we came across in the ICO days back in the late 2010s. And we pioneered it. We really, really did. We took huge risks. We still do. But when we established the relationships and we got understanding what we're working with, whether it be trading, whether it be over the counter, whether it be AI, whatever the different levels we've currently discovered, and there's always more coming, commodities markets is where we're going next, then you start to figure out, okay, so if I can create this balance in my own business, I obviously crowdfund it to get going, I seed it, or if you're really patient, which not many of us are, you'll start buying Bitcoin today and you'll wait a couple of years until Bitcoin goes up to where we expect, and then you'll use that equity. But most of us aren't that patient. Most of us we'll sacrifice things. Yeah, we'll do things differently in our lives to find the working capital to get involved with the projects. Yeah, and then we've got to manage those projects and look after them as suppliers just as much as we do our customers. So yield is a key area. Yeah, but what if you could combine equity and yield at the same time? What would that look like? Well, that's what select altcoins are all about. Alt means alternative to Bitcoin. That's where alt comes from. And there's very, very few, but increasingly powerful methods that we're using to own an asset in the form of an altcoin, to deploy that asset in what are called liquidity pools, to create an income from that in the asset itself, to leverage rebates over 12 to 36 months timeframes, all on an appreciating asset if the structure of the community and the entity and the use case and the utility of the company can hold itself together long enough, which is obviously a big part of our job in tokenomics. And then we can create another situation where we're able to take proportions of that yield and redeploy it. So we'll redeploy. So we'll interface between altcoin projects and USDT-based projects and Bitcoin itself when we're working with collateral. Yeah, so we don't expose ourselves into one thing and hope that's going to be the money shot for the rest of our days. That's just a fallacy. That'll never exist. You can't work out of pension, thinking a pension is going to be right for you for the rest of your days, figuring out that it's actually not when you get to your 50s, and then just repeat the same mistake again. You have to run your digital business in the round, which is exactly why we have 14 different industry sectors under the DBM umbrella. Right. So the final place on that before we touch on the macro for this week is all about the big picture, which is just right in our faces at the moment. We've always said for the last decade at DBM, it's always hidden in plain sight. And people look at you as if you've got two heads. What do you mean? What do you mean? There's nothing I can do about it. I'm just a guy who works. I just run a small business. Nothing I can do about it. Yes, there is. Yes, there is something you can do about it. First of all, it's about having the awareness that this is a fundamental issue. Yeah, and then go and read some books about Keynesianism, Milton Friedman, Thatcherism, Reaganism. Oh, just repackaged same problems, right? It's happened all the way up to very, very recently, actually. Monetary policies and capital flows are shifting dramatically as we speak, as we'll talk about in a minute, which means you can actually now, as a grown adult, as an individual on the planet, through the internet, on the blockchain, take control of what the monetary policy and fiscal policy of huge countries, and the world's breaking into 3 different zones right now, of what they're using in order to reset and underpin. Okay, now we've been going through a global financial reset since 2008. That's death by 1,000 cuts. QT, QE, whatever you want to call it, right? But the whole idea now is that we've got absolute vision, like visibility, right on what we've been talking about for many, many years, which is to own 1 kilogram of gold and own 1 Bitcoin. Those of you who've listened to me for any length of time know I've said that for a long, long time. And we've not just said it because it sounds clever. We're saying it because we knew, and now we know, and now we can see that the only way that they're going to be able to rebalance what needs to happen in order to, first of all, the big issue that most governments have is paying down the deficits and the debts. That's their selfish desire, which was built off their own selfish desire in the first place to just let that get out of control, because it was easier to print the currency than it was to adjust the way that global economics operates. It was only ever going to go one way. Luckily, we identified it back in 2008, individuals. And we've just built on that ever since. So now it's becoming very clear that you don't need to be, because it's impossible to be, as an individual, the center of the money supply from a macroeconomic point of view. But as an individual, it's very easy for us, and has been for some time, for us to own the very assets that they're called neutral assets. So the things that don't get affected by any given continent, any given country, any given state. These assets, gold and Bitcoin, are absolutely immune from what happens globally on fiscal and monetary levels. Best of all, they get directly positively affected by fiscal and monetary decisions. And they have been for years. Why do you think gold is now above $3,100 an ounce? Why do you think Bitcoin has bounced up towards 100,000 in less than 15 years of existence and will punch now well past 250,000? And in our lifetimes go well past 1 million. Why do you think that is? So whatever you were scratching your head over 10 years ago thinking about $100 Bitcoin, whatever you were scratching your head off 10 years ago thinking about $1,000 per ounce gold, and if you're scratching your head today listening to me talking about $3,000 gold and $100,000 Bitcoin, and you're still scratching your head, then you need to work harder. And if this doesn't get you out of bed, I don't know what does, because it's all about currency. Fiat currencies having much less value the further out you are, and you'll know where you are in this as an individual. And it's all about how much energy you've found yourself having to put in all your life for the same paltry benefit. But what if you own the center? Well, why are we so bullish about this right now? Well, because we track it and study it. And we have done for years. And it's not about, oh, we're vindicated. Oh, look how clever we are. We're now right. No, it's not about that. It's about having some level of vindication that allows us now to not just take a breath of what we've achieved, but really start now to capitalize and consolidate on just the repetitive nature of what it is that allows us to predict what's going to happen with gold and Bitcoin as it happens, mainly Bitcoin because it's the most interesting. That's what's really hitting us hard at the moment. And it's hitting us harder now because we're watching from downwards. So we're above government, above bosses, above banks in that sense. So for the longest time, it was looking up at these people and thinking, what can I do? It's just me. I'm just little. What can I do? So we're looking up at these people. And in fact, we spent a long time vindicating, pushing against these people. The longest time, we were moaning and groaning about quantitative easing and fiscal policy and interest rates that didn't seem to make sense and inflation that was being manipulated. We spent the longest time fighting against that. But this last few years, it's been more about, well, we can now see that they're moving deck chairs on the Titanic. We can now see that it's either ignorance or complicity. And I'm past caring whether it's ignorance or complicity anymore because I know that it's a combination of both. And it's written. We can see it clear as day because we spend our days studying this type of stuff. So now we're left with this very interesting phase where we're simply looking at three dynamics: inflation, interest rates, and M2 money supply. And the incredible thing about that is that, especially with the M2 money supply, this chart here sort of shows it. You've got the orange, which is Bitcoin price, and you've got the yellow, which is the M2 money supply, just in a microcosm over 12 months. And you can see the relationship. Now, we've known this a long time. Yeah, we've known this a long time. So, for example, back in 2021, the last time that there was ever any sense of quantitative easing brought into the world, the first example of that was back in 2011, quantitative easing, yeah? You've got quantitative easing, quantitative tightening, quantitative easing, quantitative tightening. We're just about to go into the fifth iteration of quantitative easing. Now, the fact that we spotted that back in 2009, we heard of it, we didn't understand it, but we started tracking it. And then we figured out, every time that the QE, price of assets go up. Now, it's not rocket science to understand why that is, because there's more currency in the system, therefore prices go up, right? Now, if you own the assets in that cycle, it's called wealth transfers. You're able to take full advantage of that cycle, which means you're able to bolster your balance sheet in the troughs, build up your asset base to take advantage of faster equity in the peaks. And what do we do with that equity? Well, we collateralize it and we deploy it. Right now, the deployment of that, if you're going after yield, is still a very early market in many ways. But the fact that it exists means that it's well worth pursuing. Because it's not just about looking at the last 5 years, it's about looking at the 10, 15, 20 years in future, God willing. Certainly, if you're looking to push this over to your kids and grandkids. But right now, as we sit mid-April 2025, it's happening in real time right in front of us, which is why it's a strategic discussion, a strategic presentation at this stage. We discuss inside the academy every week, especially in the workspaces. So the M2 is caught up. They caught up the M2 at the end of March. Okay, that's the price of Bitcoin caught up M2 money supply at the end of March. Now it's just timing. And we talk between 70 and 108 days after the fact. Okay, so the M2 money supply that we can see on this chart here, if you can see, I know it's small, but we talk about this in more detail in the academy. But this is real. This massive spike that we've seen just recently is real. This is more money being issued into the economy before they've even started adjusting interest rates, which is about to come next. So they'll go even more. And all we're doing now is we're in an acquisition phase and certainly holding. So if haven't got the cash flows in your business to necessarily accumulate, then at the least you need to do is hold. Don't get shaken out. Now that's almost a twee comment inside the DBM community these days, because most of the DBM community is so battle hardened that they totally understand that. But if you're listening to this on YouTube or you're listening to this for the first time and you've only just been buying Bitcoin in the past couple of months because you got excited about $100,000 Bitcoin, then the least you need to do is hold your nerve. Do not get shaken out. Do not get shaken out. What you need to do is wait for that next pump up, which is going to take us way past all-time high again. Way past all-time high. Yeah, we'll be hitting the door at 120, right? So this is what this is showing us just on M2. But the big headwinds as well now that we weren't necessarily anticipating until very recently. And this only came about because of the tariffs, right? What happened just in the last couple of weeks, they started to cause this effect where currency markets and bond markets got affected simultaneously, which is almost unheard of. So you end up now with the bond markets and the yields going up, which means it's costing more money for the governments to pay back the lazy debt they got themselves into over the past 50 years. So what do they do about that? Well, they won't put pressure on the central banks, and the central banks just start pressing the money printer. And as soon as they start pressing the money printer, guess what happens to the price of assets? Like clockwork. So we just move into that. We're already a month ahead of it, although I expect the Fed in particular will announce this ahead of the next May announcement. That's what I feel is going to happen. It doesn't really matter. It's going to happen anyway. Not about if, it's about when. All right. So there are two major macro tailwinds. On top of that, obviously, you've got inflation, which sorts itself out in the grand scheme of things. Inflation being as low, or true inflation. You should watch true inflation, not stated CPI. Go and look after true inflation. The inflation levels were telling us 18 months ago we had 11% inflation, not 8%. Yeah. And now telling us we've got 1.8%, not 2.5%. So we'll look after true inflation. And with inflation being well below target, whatever that means, it just gives the Fed more impetus on which to raise interest rates. So they're the three major ones. Now, the softer tailwinds are all about significant things when it comes to Bitcoin itself, which is the reserves on exchanges falling dramatically, which is what this chart is. The biggest drop in exchange available Bitcoin that we've ever seen, ever. And that's because of what's been happening over the past few months, literally. Yeah, in the retail market for sure. The big guys, the sailors of this world, is just about to buy another 20 odd million of Bitcoin today. They go OTC, right? So that hardly affects the market. But when they see memes on Twitter and memes on Facebook, whatever, of people like that buying up that amount of an asset, the retail people pile in, unfortunately pile in at the top, right, which they're just about to do again. But that just puts more pressure on exchange availability Bitcoin. That's only going to get more and more and more scarce as more and more people realize what I've just been saying for the past 15 minutes. At retail level, I'm talking about, the level we operate on. Right? The big guys, the big whales, they're buying at record pace. Record pace. Now, these guys aren't stupid. These guys know everything I've just said and more. So tracking the whales is also very interesting. And one of those whales is Tether. And just this last couple of days, we've had it announced that Tether is expected to launch on Lightning. All right, now that's big. That is very big. If you don't know, Lightning is the interface network that's built on Bitcoin itself. Yeah. Now, Tether was always built second layer Bitcoin, but it never quite worked for them. So they moved into other things, and it's been built over the last 6, 7, 8 years, whatever, on other networks. They're now confirmed they're expected to move over to Lightning. That puts massive pressure on Bitcoin, massive pressure on the supply side, which is good. And then on top of that, of course, you've got, as we'll talk about in a minute in the geopolitical section, you've got the absolute given now that you're going to find countries themselves, more geopolitical regions now, got BRICS, Europe and the US, yeah, you're finding them in whatever degree starting to move towards shifting reserves, so tax neutral maneuvers, into the acquisition of Bitcoin itself. That's country level stuff, macro level stuff, yeah? So that's happening at the same time as we speak. So what we're looking for, what's a bull scenario that's going to take us well over $200,000, the way we see it right now? It's not just Bitcoin at this stage, it's Bitcoin, hence crypto. And if you're working with, the coaches at the academy, you'll see many of them track other alts, right? They'll have their own alt. We always basically say, have a look at the top 10 on CoinMarketCap and you won't go too far wrong. You need to have your mainstay in Bitcoin. Bitcoin will go above 70% dominance again shortly. And the after effects of that is that you tend to get some short-term benefits out of altcoins, including, dare I say it, Ethereum. So what we want to see, and we're watching this real time now, so this isn't trade policy anymore. If you look at the tariffs in the face of it, you'd think it's a trading thing, wouldn't you? But it isn't. It isn't. It's all about a monetary policy. Monetary policy. So it's going to shake out to what it is. And we're literally by the day. Yeah. So last Friday, it was all about chips and other things. We saw a pump. Yesterday, a Sunday, it was said, oh no, they're not getting off the hook. We're going to still apply tariffs to that, but we've done it this sort of way. So we're watching for that today. Right. But we don't overthink it with Bitcoin, because obviously Bitcoin is something we're looking at over the next 3 to 6 to 12 months, right? But if you are in and out of this, especially if you're working day trading, then these things are relevant because you can take up some benefit from it. So we'll see today what comes today as everything adjusts, but know that these tariff wars are monetary based. I know it sounds obvious, but it's not trade. Yeah, it's a much, much bigger play that we'll talk about in a minute. So as a result of what's been going on, as I've said, the Fed has to move in. It's called dog whistles, right? So they're giving us massive dog whistles right now that they're going to start buying up treasuries. Nobody else wants US treasuries. So they're going to start buying, apart from USDT, but they're going to start buying them up, okay, which basically means quantitative easing. We've already explained what that means when it comes to price discovery. And then from the US side, which is where a lot of the energy from Bitcoin growth is going to come from, US people, they're going to get this one big bill passed, right? One big, beautiful bill. So that's going to be a lot about tax. So he's going to try and counterbalance, the effects of possible price increases, in other words, inflation, coming through tariff, which I think will be controlled through monetary policy anyway. But they're going to bring a lot of changes in, which means that the average Joe Sixpack in the US will feel like they've got more purchasing power. So that'll again lead to a bigger headwind behind Bitcoin itself, because of all the while, more and more people in the world are listening to messages such as this, which is why we're on YouTube, right? So get the bell tongue there and share this out there, guys and gals, because this is a very important maneuver now. through 2025. For those who really want to put some muscle on their balance sheet and then know how to use that to create perpetual cash flows the way that we do at DBM. Okay, gold sits behind all that. And we don't know when this will be, but it'll likely be certainly over the next 5 years that we'll see Bitcoin go way above the issuance in terms of gold value. Yeah, gold's one of the biggest markets in the world, obviously, and we're bound now to see Bitcoin go past that. That's when you're going into $1 million territory for a Bitcoin. Okay, as soon as we have that met, then you'll see what that's all about. And all the while, by the way, Bitcoin and gold are just moving more and more and more away from any relationship with the S&P, with the Dow, or anything like that. Just moving more and more and more away. I think that'll happen over this next few months, personally. So look at M2 money supply up, interest rates down, Bitcoin, strategic Bitcoin reserves, over-the-counter down, exchange reserves down, global demand up equals price. It is actually that simple. Believe it or not, once you understand it. Now, geopolitically, very important. This is a little bit more nuanced, but it adds more flesh to the bones of the macro in terms of what we're actually observing going on here, which I'm delighted to be able to be talking about. I mean, we spent a long, long time in the wilderness, huge numbers of years in the wilderness thinking what they're going to do. You know, that's why we were fighting the system for so long. We didn't want anything to do with governments and bosses and banks. Everything we needed to be, you know, for the individual, decentralized and everything else, which still has some merit, of course. But what we're finding now is that's becoming a global conversation in terms of decentralization. Okay, so it's all about capital deployment. This is where you're getting your 3 different regions going on: US, Europe, and BRICS. So Europe, Canada, UK, strictly speaking, USA, and BRICS. They're your 3 zones that are going on. And they're all starting to build up this hash race. Right? So the hegemony has actually been now moved back to Europe. It came from Europe originally in terms of the military complex and all the rest of it. That's now gone back to Europe again. And now you're seeing the arms race playing out in real time over there. And the US are becoming much more parochial, much more isolated. Yeah, that's the experiment that Trump's basically put on the table. With BRICS, so they had no choice. So Brazil, Russia, India, China, and South Africa, they had no choice but to be isolationist because the US weaponized the dollar, right? And it put them under so much pressure. And it's still doing that right now, particularly with Russia. But if you've observed what's been going on over the past year or so, certainly since we've seen more visibility, let's say, in the relationships that Russia and India and China have, then it's pretty obvious now that the upper hand and the capital markets is with the BRICS, which makes the sanctions that the US has placed and Europe on Russia completely void. That's why you're seeing the US stand off from Russia and letting Europe get embroiled in the brinkmanship, let's call it. It's toothless. It's toothless. Now, everybody knows Russia needs to step back and stop bombing things and stop misbehaving. Everybody knows that. From a humanity point of view, that has to stop. That's the most important thing. But there's a reason that the US is circumventing Europe and leaving Europe holding the bag, right? It's all about monetary policy. All about monetary policy. Oil and Bitcoin and gold and stock. Yeah. So you'll find the US get much closer with the BRICS, and Europe will have to make its mind up because Europe and Canada and the UK, they're just floundering. I heard someone mention the term immutable bureaucracy. Europe and et al. Are an immutable bureaucracy. That's brilliant, right? What a term. They're unchanging. They won't shift. They can't shift because nobody's managing them. They're just following and being left holding the bag. So something's going to have to give. So what the Europeans are doing, well, they're trying to get closer and closer to working with each other, because they're a big customer base, let's face it, biggest customer base on the planet, probably, after China. So the whole idea is they've got leverage, but there's nobody managing them. There's nobody managing it at all. And therefore, you're left in this void where you've got the people like the ECB just roughshotting over the population saying, yeah, CBDCs by September. well, it's not going to affect me personally because I'm sat in the UK. And even if I was sat in France or Italy or I was sat in Spain or Germany, it wouldn't affect me because Bitcoin is the way out. Right? I don't care. CBDCs are just a rail. But for the average person, 95, 97, 96%, whatever, of European and Canadian and British population, they're just going to accept it like they accepted decimalisation, like they accepted the euro. They're just going to accept it. Right? That's the problem. While the rest of the world is being much more savvy about understanding a global monetary reset based on gold-backed stablecoins. That's what they'll term it because it's easy for them to comprehend. But it's probably they're going to move a huge amount of gold over to Bitcoin anyway, so it'll become interoperable. The same thing, right? Either way, as I said earlier, it's a baseline on which they're going to be able to ensure that currency withholds some level of purchasing power. In other words, we're moving away from full fiat. Where the US comes into that, we're still figuring out. We're still figuring out. But it's likely they're going to set up trade collaborations with the major economies, major populations of the planet, yeah, and leave Europe holding the baby while they do it. So we'll watch that and see what happens. Either way, on a practical level, Trump, first president of the US ever to put a crypto broker rule in place, right? A full-on bill, the first ever bill signed by a US president, yeah, which just takes us one step closer to the strategic Bitcoin reserve that we anticipate. And don't forget now, him as a family there. Don't forget Trump, these are implant people. So Trump's there to look after what Trump needs to look after. Yeah. Already now $1 billion in the Trump family that's built off the back of digital assets. And they've done that in next to no time. And that's not including his own coin, by the way. So all these things are driven, yeah, towards a goal. And as I say, because we've been savvy enough to slipstream or often front run what a lot of these people we saw inevitably would end up doing, then we're just going to enjoy the ride up to $200,000 Bitcoin. Not as a speculation or a hope or a, just wishing. It's built on mathematics and it's built on pure momentum being driven by global economics plus, let's say, vested interest. Okay, Paul Atkins on that point, now in as SEC chair, hugely pro Bitcoin, hugely pro crypto, known about it for a long time. Another, just to repeat the tariff effects, okay, we're accelerating to a new world order, not the old school world order, the new world order, which has given us this dynamic between three different trading blocks. All right, we're just going to have to find out where that shakes out. But in the process of all that, gold and Bitcoin are the only neutral assets. If you can find any other neutral assets, let me know. In other words, assets that aren't affected by the movement of trade, the movement of fiscal, the movement of monetary. Yeah, best of all, as we're seeing right in front of our eyes, as we've said for well over a decade with gold is safe haven. So just own 1 kilogram of gold. It's a toga in the suit, right? So bosses, banks and governments, hedging in all jurisdictions, that's just now normal. We're only in April. And it's a case of us making sure that you're in the center of that, do whatever it takes to put yourself in the ownership of the money supply, whatever shakes out. That's the benefit of doing what we do, right? We don't want to be the richest man in Babylon. We're doing it to keep an eye on other people. We need to help each other, but it's easier to help other people when you've sorted yourself out, right? So we do that by working together. We do that by being collaborative, and we do our best to create collaborative initiatives, yeah, that encompass people, because it's easier to build faster when you work together. Pride Alliance stuff, right? Some people get that, some people don't. Especially when it gets tough, people tend to get emotional, right? We'll be here working through it, whatever it takes. In any case, as I'll talk about in part 2 of this video, which takes us into the practical things we do to turn everything I've spoken about for the past few minutes into real life income every day, in some cases every minute of our lives. See you on the next call.